The Federal Church presents them better than Bloomberg. Got another note from Zero Hedge here about the FTX implosion. FTX, and this one is actually pretty interesting. It was demonstrating how a subsidiary of FTX, Alameda, knew it was pilfering client funds. So the title is FTX held just $900 million in liquid assets versus $9 billion in liabilities as video emerges confirming Alameda knew it was pilfering client funds. On Friday, we had learned. Gotta get rid of one of these pop-ups here. But on Friday, we learned, courtesy of a mystery Twitter account belonging to an anonymous FTX insider, that the now bankrupt crypto exchange held just $900 million in liquid assets, including, among other things, a $7.3 million online bet by Democrat mega donor Sam Bankman-Fried for Trump to lose. And here is just a little Excel spreadsheet of their assets there. I don't know what semi-liquid would count as, but those look like shit coins to me. You know, if you start dumping them, they're very much illiquid. Of the $900 million in liquid assets, the largest portion, or roughly half, was in the form of $470 million of Robinhood shares owned by a Bankman-Fried vehicle, not listed in Friday's bankruptcy filing, which included 134 corporate entities. The liquid assets represent just 10% of the total assets, including $5.4 billion in semi-liquid and $3.2 billion in illiquid, and is a fraction of the $9 billion in liabilities at FTX, which will now make their way through bankruptcy court for the next several years. A document which the Financial Times also tracked down on Saturday and discussed here, and which was shared with prospective investors before the bankruptcy, provides a detailed picture of the financial hole in the FTX crypto empire and suggests customers of FTX International may face steep losses on cash and crypto assets they held on the exchange. And speaking of the 134 subs that FTX listed on its bankruptcy filing, the FT notes that the company had incorrectly listed entities it did not own in its initial filing, while, as we reported earlier, the exchange suffered an apparent hack on Friday night that drains its balances to zero. What a coincidence, right? Aside from the spreadsheet shown above, the Financial Times also noted another spreadsheet which references the $5 billion in withdrawals last Sunday, which, as everyone knows by now, were precipitated by CZ telling the world that he would pull his money after the recent revelations and sparking a bank run on FTX, which the exchange did not have nearly the funds to defend against. The sheet also noted a negative $8 billion entry described as hidden, poorly internally labeled fiat at account. No idea what that means. It is this entry that the prosecution's case will revolve around, because Bankman-Fried told the Financial Times the $8 billion related to funds accidentally extended to his trading firm Alameda. Just basically funds he should not be commingling, I guess. He declined to comment further. Earlier this week, he tweeted that FTX International had $4 billion in easily tradable assets when it faced Sunday's $5 billion surge of withdrawals. He has since deleted many of his fraudulent Twitter misrepresentations. There are many things I wish I could do differently than I did, but the largest are represented by these two things: the poorly labeled internal bank-related account, SIG, and the size of customer withdrawals during a run on the bank, the spreadsheet adds. Shifting away from assets, in its now irrelevant investment materials, FTX Trading Limited, the company behind the main international exchange, stated $8.9 billion in liabilities, the biggest portion of which is $5.1 billion of U.S. dollar balances. Healthy companies typically have assets that match or exceed liabilities. The spreadsheet says FTX Trading had a total of $9.4 billion of assets, but as it itself suggests, only 10% or so could be made liquid in the case of a crisis. Well, they're well beyond the crisis now. Indeed, the vast majority of FTX Trading's recorded assets were either illiquid venture capital investments or crypto tokens that are not widely traded, according to the spreadsheet. And like I was saying, if you try to dump it, the value quickly goes to zero, which cautions that the figures are rough values and could be slightly off. Yeah, I'm pretty sure those marks are way off, especially in practice when you try to dump it. There is also obviously a chance of typos, etc. They also change a bit over time as trades happen. Oh, there's my music showing up. As shown in the spreadsheet above, the company's biggest asset as of Thursday was $2.1 billion worth of a cryptocurrency called Serum. Another shitcoin. Unfortunately, the market value of Serum was only $86 million on Saturday, according to CoinMarketCap, suggesting FTX's holdings are a fraction of what it was representative sold into the market. And while we now know that the endgame was bankruptcy, the Financial Times reports that, according to the latest set of investment materials, SBF was seeking to raise $6 billion at $10 billion, including from a convertible preferred stock paying a 10% dividend that could later be converted into common equity in FTX International at a valuation between $12 billion and $15 billion. This is just a lower bound on the terms investors can get the materials at. What about the liquid assets? Well, the Financial Times reports goes on to note that until Friday afternoon, Bankman-Fried was looking to sell 472 million of Robinhood shares, the largest liquid asset listed for FTX trading. In privately negotiated deals he was arranging on the messaging app Signal, according to an FT source. As a reminder, SBF, bank fraud over there, acquired a 7.6% stake in Robinhood in May. A transaction which delayed but did not halt the company's collapse into oblivion. As a part of the attempted fire sale, bank fraud was entertaining offers at a 20% discount to Robinhood's VWAP price, or about $9 per share, said an FT source who ultimately declined to buy due to perceived legal risk. What is remarkable is that the proceeds from the Robinhood stock offering would not have gone to the now bankrupt FTX estate to satisfy prepetition claims. Instead, the Robinhood shares were held by an Antigua and Barbuda entity called Emergent Fidelity, which is personally controlled by Bankman fraud there, according to U.S. security filings. Emergent Fidelity is not among the entities listed in Friday's bankruptcy filing. In other words, SBF, who is most certainly on the run at this moment, and in the other video I just put up, it seems like he's taking a trip to answer to U.S. authorities, but he's not being extradited. I guess he's going voluntarily. Was hoping to fill up his personal bank account by dumping his hood holdings while giving FTX creditors the finger again. Finally, as we noted on Friday, the FTX spreadsheet also noted that in addition to the $900 million of liquid assets, $5.5 billion of less liquid assets consisting of crypto tokens, and $3.2 billion of liquid private equity investments. Here's some Twat Fest post. Twat. SBF bet $7.3 million of users' money on Trump losing 2024. You can't make this shit up. Yeah, that's pretty fucking ridiculous. There was also an obscure $7.3 million bet for Trump to lose, which is par for the course for any Democrat criminal mastermind. Good news for the rest of the crypto space: there are no Bitcoin assets listed, despite Bitcoin liabilities of $1.4 billion. That means the company cannot dump Bitcoin in the open market, and it also means that the odds of continued selling pressure are now far less than previously speculated. Just far more than one can say for Vlad Tenev, whose Robinhood stock is facing a world of pain when it reopens on Monday. And while this was a note from a few days ago. And while the above will surely be Exhibit A for the prosecution, Exhibit B will be a video meeting in which Alameda Research's chief executive and senior FTX officials confirmed that they knew that FTX had lent its customers money to Alameda to help it meet its liabilities, and commingling funds they should not be doing. Citing people familiar with the video, the Wall Street Journal reports that Alameda employees held a video conference late Wednesday Hong Kong time, in which 27-year-old Alameda CEO Caroline Ellison, also known as at Caroline Capital on Twitfest, said that she, bank fraud, and two other FTX executives, Nishad Singh and Gary Wang, were aware of the decision to send customer funds to Alameda. Let's take a look at it.
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math. Being comfortable with risk is very important. We tend not to have things like stop losses. I think those aren't necessarily a great risk management tool. Trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that.
Singh was FTX's director of engineering and a former Facebook employee. Wang, who previously worked at Google, was the chief technology officer of FTX and co-founded the exchange with Mr. Bank Fraud. Ellison said on the call that FTX used customer money to help Alameda meet its liabilities, the people said, assuring the 27-year-old teenager lookalike of a lengthy prison sentence. Yeah, that's Hilariously, after tweeting out all the incriminating evidence, the prosecution will need to slam dunk this case. Neither SBF nor Caroline Ellison returned Wall Street Journal phone messages and an email seeking comment. Singh and Wang didn't respond to multiple messages seeking comment. Ryan Miller, FTX US's chief legal officer, also declined to comment. Of course, but it's not like they have anything to say that we don't already know. Well, we take that back, considering that FTX was instrumental in laundering Bitcoin into Ukraine. It will be very interesting to go through all of these fund flows as a part of discovery. Apparently there's an article from CoinDesk that talks about money laundering in the Ukraine with FTX. At the National Bank of the Ukraine, too. Look at that. This stuff gets more and more entertaining the more you look into it. We do wonder just how much crypto money laundering between the U.S. and Ukraine will emerge as a result of the bankruptcy discovery, and how long until we can safely claim that Sam Bankman didn't fry himself. That's pretty funny. And that has been another episode of The Federal Church Presents Better Than Bloomberg. Just another article on the collapse of FTX as it gets more and more entertaining.